Prevention of money laundering and terrorist financing is an area that's highly likely to have a question in the exam. There's quite a lot of material just for what often is just one question. Nevertheless, you should be aware of it. Now, we are highlighting 4 of Hong Kong's ordinances and 1 guideline that's been issued by the SFC on anti-money laundering and counter-terrorist financing. The first ordinance is the Anti-Money Laundering and Counter-Terrorist Financing Ordinance. Now, this came out in 2012 and had a major effect because it moved money laundering and the assistance in money laundering from a civil to a criminal offence. That means that you can go to jail if you are involved in any way with money laundering, and that had a big effect on behaviour, commercial behaviour in Hong Kong. As it says, the second main bullet point, a breach of AMLO is a criminal offence. What can happen to you? Employee managers of licensed corporations, registered institutions who knowingly cause or permit the breach of AMLO, you're committing a criminal offence, maximum penalty 1 million and 2 years in prison. But if fraud can be shown to be involved, that prison sentence can go up to a maximum of 7 years. And so it has had quite an effect. But the ordinance that's been around the longest in Hong Kong and probably the most examined is under paragraph 3.2, Drug Trafficking Recovery of Proceeds Ordinance. Here, as it says, it's an offence to deal with property known to or believed to represent proceeds of drug trafficking. Now, if you don't know that the proceeds came from drug trafficking, and it's reasonable that you weren't aware, you will not be committing an offence. However, if you become suspicious or you become aware, then you must disclose that information to the police, Customs Excise, Joint Financial Intelligence Unit. And if you do not disclose, you are committing an offence. Then we have the Organised and Serious Crimes Ordinance. That's similar to Recovery of Proceeds Ordinance, but the offence will have occurred in Hong Kong, and this ordinance gives the police powers to obtain court order, to provide information, and to submit someone to searches, which is not the case with the Recovery of Proceeds Ordinance because the drug trafficking usually takes place outside of Hong Kong. And then the fourth ordinance, the United Nations Anti-Terrorism Measures Ordinance, and that came in because of the events of 2001, and it makes it a criminal offence to provide, collect property or financial services to or from terrorists. We then have the guideline on anti-money laundering that's been issued by the SFC. And a lot of this material you may well have seen in internal training courses, procedure manuals, etc. At the bottom of page 6.10, we see the 3 common stages that have been identified by the SFC in the process of money laundering: placement, followed by layering, followed by integration. And we've given details. That used to be examined, not so much now, but it's not difficult. Be aware of the 3 stages. The guidelines require licensed corporations to issue policies, ensure staff understand the guidelines, regularly review their policies, and appoint a money laundering reporting officer as a central reference point. And that's an international requirement now. We see that in many of the financial centres. Now, the detailed guidelines of the guidelines cover client identification, ongoing monitoring, record keeping and retention, recognition, reporting of suspicious transactions, and we are given examples of suspicious transactions. Now, have a read through those. Those are obviously what the SFC consider to be suspicious, and they can be the subject of a question. We're then taken through procedures that you should follow for the disclosure of suspicious circumstances. And the stages are, well, the suspicion forms. You then consider the need for disclosure, followed possibly by urgent discussions with management. Then you could conduct appropriate questioning of the customer. Now, it's important to remember that during questioning, you should not inform the customer or give details to the customer as to why you are questioning. That has been examined. Review all customer information, and if the suspicion still remains, you report the matter to the Joint Financial Intelligence Unit and record the report in a register. And you should have sufficient education and training around the concepts of anti-money laundering and terrorist financing. We then have a section on electronic trading. Now, electronic trading became an issue a number of years ago when we had major computer trading and a number of cases of flash crashes. The prices crashing because the computer programs kicked in through their algorithms with mass selling. And so the regulators around the world have focused on conduct requirements when it comes to electronic trading, and Hong Kong is no exception. Now, electronic trading is not regularly examined, although a little later I'll highlight one or two points that have been questioned. But generally, there should be responsibility for orders in the electronic trading processes. There should be sufficient management and supervision, and the system should be adequate for what you are intending to perform. And you should have sufficient record keeping. Now, specific requirements on internet trading and direct market access. Now, direct market access is allowing your clients through your systems to access the stock market. I want to look at the minimum client requirements for DMA services, that is direct market access, because we have seen this come up. And they tell us that DMA clients, your clients should be vetted before you provide any service to them. Comfort should be gained that the client has appropriate arrangements in place to ensure its users are competent in using the relevant systems, that they understand and comply with applicable regulatory requirements, and that the client's able to monitor the orders entered through the DMA services. And we're told that the licensed person should regularly evaluate minimum client requirements given current market conditions and consider whether clients using the service continue to meet minimum client requirements. Now, the note in italics is pretty important. DMA, well, it's explaining what it's all about. DMA refers to market access for a client through a licensed or registered person's identifier, whereby client transmits orders directly or indirectly to the market's trading system for execution, but going via your systems. We then have some material algorithmic trading systems and trading algorithms. Algorithms are the process that the computer programs follow. And we've got material on qualification, testing, and risk management, not something that I've seen addressed in the exams. What I have seen addressed in the exams are alternative liquidity pools. Now, these are trading platforms operated by private ventures where they are offering clients access to trading, buying and selling both Hong Kong and overseas listed securities. Now, the SFC has taken it upon themselves to regulate this area. You must be licensed to operate such a pool. Let's have a look at the material in detail, because we've seen this come up on a reasonably regular basis. Management and supervision. An ALP operator should have written policies and procedures to ensure at least one responsible officer or executive officer in a registered institution is responsible for overall management supervision. Now, this is slightly confusing because for every regulated activity, a licensed corporation should have 2 responsible officers. But when it comes to the ALP, they need to have at least 1 responsible for overall management supervision. There should be controls to manage the risk of the operations, should be formal governance process with input from risk and compliance functions, and there should be clearly defined reporting lines. 4 bullet points, always a favorite for an examiner to take 4 bullet points and then change one of them. And the one that I saw change was the first one. They said there's at least 2 responsible officers, which is reasonable, but in this case, no, it's just 1. Regarding access to and operation of these pools, a pool operator should ensure only qualified investors can become ALP users. This is important material. Ensure client orders have priority over proprietary trading orders. Now, what that tells us is proprietary trading orders are permitted. So an ALP operator can put in its own orders. However, the client orders have priority over the proprietary orders. And you should revise, update as necessary the ALP guidelines. So that's the regarding access for an ALP operator. Adequacy of systems. ALP system should restrict visibility of trading information available to staff of the operator. So this is to avoid unfair benefits to when trading, almost a form of insider dealing. So the staff of the ALP operator should not have full transparency. And so the operator should restrict staff access to ALP trading information, should keep SFC informed of the identities of those staff with access to the pool, maintain a log of details of staff access to the ALP, and ensure staff members who originate proprietary orders, so they're putting in the orders for the operator of the platform, they do not have access to any trading transaction information. And with record keeping, the operator should keep proper records covering design, development, deployment, and operation of the platform. And the SFC should be kept informed of any changes to the ALP operation. Now, I've gone into alternative liquid pools in a bit of detail there because it's not universally familiar material, and it is starting to be examined. Now, I can contrast that with the next section, Personal Data Privacy Ordinance, and people are very familiar with this material. Personal data is protected through the legislation, and this is the ordinance that does so. And there are 6 data protection principles, and they're listed there. So please read that material, make yourself familiar with it, and be prepared for 1 question on the exam. Compliance and related issues, and this we're sort of now wrapping up a lot of the material into general themes here. The intermediary should ensure good compliance philosophy is established. Directors and employees meet the highest expectations of the clients, market regulators, government. You can't argue with that. We're then given the roles that senior management should perform. And again, nothing untoward listed there. Now, corporate governance, 2 aspects of corporate governance. One is what is corporate governance, and then what is good corporate governance. And we're told the first bullet point under corporate governance is concerned with the system by which companies are directed and controlled to ensure the proper relationship between a company's management, board, and shareholders. We want to ensure that no one party takes advantage of the others. Classic would be an overbearing CEO, the Robert Maxwell situation. And right at the bottom, the last bullet point on page 6.19, an objective of good corporate governance is to avoid management taking improper advantage of its position to the detriment of the company's interests. So that's the definition, an objective. And now we're going to look at the top of page 6.20, what we consider to be good corporate governance or improvements that can be made through. First of all, installing appropriate checks and balances, such as separating functions of chairman and CEO. That's considered good corporate governance. Appointment of non-executive directors, good corporate governance. Establishment of independent audit committees and setting up of remuneration and benefit committees. Increasing transparency and disclosures to shareholders, stakeholders, the public, considered good corporate governance. Adopting international accounting and auditing standards, installing strong protective structures for minorities, and identifying penalising corporate wrongdoing. And the last point that's made is that Corporate governance deficiencies can lead to insider dealing, fraud, connected transactions, which are undervalued. So that's where you don't have the separation of functions, duties, and people can blur the lines and enter into transactions which disadvantage some of the stakeholders. Finally, other matters concerning business operation and practices. We've got insurance cover and the common reporting standard. Now, insurance cover is a requirement of licensing if you hold client securities, client assets. And the fourth bullet point tells us that the risks covered are the loss of client assets by the licensed corporation attributed to fraud or theft. And an example of the amount of cover required, 15 million for each of dealing in securities, futures, and securities management financing. That 15 million has been there for ever since the exam started in 2003, and it has never been examined, so I wouldn't worry. The Common Reporting Standard came in 2014 worldwide, and this is where Hong Kong institutions have to report to the Inland Revenue accounts of customers and clients who are tax residents of overseas reportable jurisdictions. And that has been in place for a number of years now, and that is trying to reduce tax evasion. Okay, that brings us to the end of topic 6. Now, topic 6, the material is not that challenging, because much of it candidates are aware of from their work experience, from training manuals, from procedure manuals. Nevertheless, you should make yourself familiar with it and do as many questions as you can. And of course, we've got our question practice for you waiting on Examinator.online.